Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy, and today is June the 18th, 2025. I'm going to start today with yesterday's thumbnail. Now, just to give you some background, I have a lot of fun making these thumbnails. I use AI a lot, ChatGPT, and other um, AI imaging, just to make fun thumbnails. Little did I know how foreshadowing this thumbnail would be. We did see some major gains in wheat today. Here is today's thumbnail. We did see some shorts, some short covering from the Chicago or from the wheat pits today. So I also thought this was interesting. I think what's most interesting about this AI generated images is that most of the people in the look exactly the same. There obviously is an aesthetic to the Chicago wheat trader because I did put that uh, into the prompt. So if you look like this and you are a wheat trader, then you're part of you're part of the bigger picture. All right, let's get into what happened in markets today. We are down $3.40 in canola. That's on the November. 736.40 is where that closed. Minneapolis wheat was up 15 and a half cents. 646 and a quarter is where that settled at. Kansas wheat up 23 and a half cents at 571.25. Chicago wheat up 25 and a quarter at 574 and a quarter. We saw soybeans up 3/4 of a cent at 1074 and 3/4. Bean oil up slightly at 55.40. That's essentially unchanged, but still high relative to where prices have been in the last week or so. Corn was up 2 at 433 and a half. We have the Canadian dollar trading at about 73.18. It's been as low, I think, as 73.13. It's come off significantly in the last couple of days. I think I have a chart on that in here as well. Live cattle up a buck five, 100 weight at 211.68. Feeder up 82 and a half cents at 304.18 per 100 weight. All right, I know this isn't necessarily grain market related, but I think it is kind of breaking news. This just happened a few hours ago. The Fed held rates today steady at 4.25 to 4.5, which reflects some caution amid some mixed economic signals. Some of those signals were as a result of geopolitics and tariff cloud outlook. Escalating tensions in the Middle East, which is a soft way to say that, have pushed oil prices higher, while fresh U.S. tariffs are fueling inflation uncertainties as well. Economic growth is softening and inflation is still being stubborn. Surveys anticipate 2025 GDP growth slowing to around 1.3 to 1.4%. Inflation is still running above target at about 3%. Unemployment is also rising. Those aren't necessarily great economic signs. The Fed is delaying rate cuts despite market and presidential pressure. Officials signal caution, likely holding off on any rate reductions until September at the earliest, pending clearer economic and policy signals. We'll show a chart of some of the currencies in a moment here. Now let's get into the wheat. Now, at first, I was reading that winter wheat crops in the plains state of Nebraska and Kansas may be in for a big storm uh, early next week. And if the storm hits as forecast, then the waterlogged crops that are already experiencing some health issues because of the rain may face further damage. Many farmers have been unable to get started on harvesting because the soil has been, too wet to get their combines and such in there. So further rains would further exacerbate the problem. Now, here is the precipitation map for 174 hours. That takes us into Wednesday, June 25th. So about a week from now. When you look at this, it doesn't necessarily look like there's a big problem. What they're stating is this system that's kind of moving through Kansas and into Nebraska. Now, Nebraska looks like it's the worst hit, Kansas, not so much. But if there's already water on those fields, and any water at all might, create delays. So when you look at this map, it looks like that reaction to a storm warning is overrated, but you never know. I don't have boots on the ground there. It could be significantly more wet and more serious than what this is showing. At any rate, we did see some short covering today in the Chicago SRW pit. At the time, at midday, they were 23, 25 cents higher, closed even higher than that. Um, the markets are also closed tomorrow in observance of Juneteenth, with the government closed as well. So the reports will be pushed back as well. So this may have been some like, holiday day front running on the short covering. Um, so that may mean that, come Friday, we may not see these gains sustained. So that's something to keep in mind, particularly if the storm dissipates in strength or anything like that. But that's what happened today. Here's what the charts look like. We were already, as you mentioned, we were already thinking that this market was set to break out. We were watching these kind of resistance levels, this previous high, even this channel kind of resistance, some of these moving averages. Chicago wheat just blew through all three of those today. So that could mean that we see some further sustained short covering or some further sustained strength as a result of this. Anytime you move them above some moving averages above, there's lots of resistance that this broke like a hot knife through butter. So we could still see some bullish pushes in this wheat chart. Similar thing happened in Kansas. We saw, that channel break. It did break the 100-day moving average earlier, the 50-day moving average earlier in the week. We broke above the 100-day moving average now, still below the 200-day, but still, we're kind of in this cluster now of consolidation. So, it's possible that Kansas might consolidate in there, but I do think that Chicago is the one leading the way here. So if we are going to see a continued push in Chicago, I think we'll see a continued push in the other wheats as well. Now, Minneapolis didn't necessarily participate to the same level. We saw, well, not maybe a little better than half of the cents per bushel gain. But we still saw some significant moves above resistance. We saw this high get taken out here. We saw this high from March get taken out. So now there's a whole lot of air until we get to about 680 up here where this market traded before. So, lots, about 20 cents of gains that could come here before we see some technical resistance in that 680 mark. So that's positive for Minneapolis wheat as well. This wasn't even exclusive to the North American exchanges. We did see Euronext milling wheat also rocket higher, breaking above its 20-day moving average, which it has struggled to get up through much of the month of May and June so far. It also cleared the 50-day moving average. Still a high here from mid to late May that it needs to clear at about 213 bucks, 213 euro, but still, a positive day for wheat overall around the globe. All right. You know what? I noticed that 72% of the people who watch my videos are not subscribed. So, you might as well subscribe. And then you get everything in your feed and in your inbox if you choose. There's a little subscribe button here on the ICL or the Ireland Como Lafoy YouTube page. You hit that to subscribe. You can hit that little bell to get notified when we publish new content. We're even trying those, short video things just to see if people like those. People do seem to like those. As they like to get some information quickly. And these long form videos aren't for everybody. So if you're interested in getting our information on Canadian ag markets, make sure you subscribe to the YouTube channel. Also, if you want to get our premium content, including the hot take that we sent out today on canola risk management strategies, you want to subscribe to our insights. That is 99 bucks a month. You go to CanadianAgMarkets.com/subscribe and hit the subscribe here button, and it will take you through the process. All right, getting into some of the other non-wheat markets today. November canola was an interesting one. It actually did make a new high at $744.50 before backing off. We closed at about $736.40. So again, making a new high. We did finish lower. Not a whole lot of warning signs. However, there is a lot of air now between the 20-day moving average and current values. That always kind of scares me a little bit. I like it when, the markets are trending higher and they're trading along the 20-day moving average. We tend to see the markets kind of correct towards the 20-day moving average quite frequently. So there might be a bit of a spread play here as far as, hedging ahead of a move towards the 20-day moving average. Again, we talked about some of that in our premium hot take report today. December corn also looks a little bit stronger today. It did trade, higher, broke above the 20-day moving average. Still hasn't, really gained a whole lot of momentum yet. Still looks relatively weak, or at least range bound, but we did see a little bit of a break of resistance today in the corn market. November soybeans also made a new high today. That new high was 1071 and 3/4. That bests, or let's see, the next level of resistance here is this February high at 1075 and 3/4. So again, we aren't that far from there. It may be testing some resistance there, and this may be worth watching to see if it can break above, particularly if we start to get some, row crop weather scares in the U.S. that might add some strength to this. All right, kind of going back to the discussion about the interest rate hikes, the U.S. dollar saw some gains over the last couple of days. Yesterday's may have kind of been front running the Fed decision today. We did see some small gains that tested the 20-day moving average today. Again, this market has been very weak over the last little while, and as a result of just economic uncertainty, as a result of the new U.S. administration and the tariffs and the employment situation and even the inflation situation. So overall, we're still weak on the U.S. dollar, but the Canadian dollar actually corrected quite significantly today or over the last couple of days, larger than what the U.S. dollar index correction would have suggested. We were just under 74 just a couple of days ago, and now are threatening 73 at the time that this snapshot was taken. So lots of volatility in the currency markets. There's still lots of volatility in the crude oil market, and of course some exciting volatility in the grain markets. All right, that is all we have for you today. Thank you for tuning in. We hope that you tune in again. We probably will take a break tomorrow as the U.S. markets are closed, but we hope that you tune in again on Friday. Have a great day.